But will the same companies and currencies perform well this year? We talked to investment expert Juliet Schooling-Ladder from Fund Caliber to take a look at 5 themes that are likely to continue to influence the world of investing in 2018 and 5 funds that could be worth a punt. Given that this could considerably cut administrative costs for banks in the future, investors who have missed out on the Bitcoin boom could consider funds that have exposure to the still unloved sector. One example of a manager who is particularly keen on banks is Alastair Mundy, who heads up the Investec UK Special Situations Fund. The £1.1 billion fund currently has a 30.6% weighting to the financial sector and counts the likes of HSBC, Barclays, and RBS as some of its largest individual constituents. U.S. President Donald Trump's proposed reduction in corporate tax could result in a further boost for U.S. equities. The fund invests in companies where innovation, unique brands and intellectual property give them a competitive advantage, helping them grow into market leaders. It has a bias towards medium-sized companies. A hot topic among investors over recent years has been the rise of e-commerce and how this will influence the long-term spending behaviors of consumers across the globe. Of course, the market leaders in e-commerce are Amazon in the West and Tencent in China. More than 50% of online sales over Thanksgiving weekend were via Amazon, and it is now going into the food delivery space with Amazon Fresh. Since 2008, central banks in the US, UK and Europe have been employing expansionary monetary policies to stimulate their economies. They have been putting money into the system by buying bonds and lowering interest rates. With growth around the globe now looking healthier, the trend has started to reverse, and central banks are selling those bonds and raising interest rates. This is known as tapering. Central banks will be keen to tread carefully, as the last thing they will want to do is stunt this growth in any way. With Brexit negotiations still in their early stages, investors could be forgiven for steering clear of UK smaller companies' funds at this time, but they could be missing out. Emerging markets were rewarding for sterling investors in 2017, returning in excess of 20% over the year. India and China have performed especially well. We believe there is no reason why this can't continue throughout this year. We are particularly positive on India, given Prime Minister Narendra Modi's economic reforms and the country's improving corporate governance. A fund we like that invests here is Goldman Sachs India Equity Portfolio. The fund's objective is to capture the growth potential of the Indian economy